Hi everyone, welcome to the video. Thank you so much for joining us here on another video. Today we're going to be placing an iron butterfly trade. Now we're going to be looking at the chart, we're going to be analyzing the chart, and then we're going to go ahead and place that iron butterfly trade. Now we're going to be specifically using the Fibonacci Price Tool to find areas of support and resistance when we place this trade. So this is a video that you're not going to want to miss. So let's go ahead and get started. All right, you guys, we are inside the Thinkorswim trading platform, and we are looking at the ticker symbol XLY. Now, XLY is the consumer discretionary ETF, and you can see that basically since about December 24th, Christmas Eve, this stock or this ticker symbol, this ETF, has had a pretty much straight up move since this point. And if you look at the markets in general, the broad markets in general, they've all had a explosive move to the upside. So the old saying goes, you know, we're looking at this chart here, and I mean, yeah, we've had a big move up, and this, you know, this can't go up forever, right? I mean, theoretically, yes, it could, but there's going to be people that are looking at this and coming in here around this resistance level that we've had in the past. You know, we're going to have traders looking at those resistance levels and saying, hey, you know what? I've had a nice run. I bought down here. I'm going to start selling up here because I don't want to lose those profits that I have made. And then you're going to have all those other people that, you know, that are shorting the market, that are looking at it and saying, hey, we have this stock that's come up here, and you know, we're gonna see some resistance. This is a great opportunity to short the stock. So we're going to have people that are just shorting the stock that don't even own the stock that are going to short it. So, you know, coming up in here in these resistance levels, we're probably going to see a little bit of a pullback, or maybe even just trading sideways here for a while. And that's where the iron butterfly comes in. When we're looking at trading iron butterflies, we're looking at the stock staying in a range for a certain period of time. So if we look at, you know, this move here, you can see that we've had this nice move. We're coming into this resistance level. And one of the first things that I like to do when I'm analyzing a trade is to draw my Fibonacci levels on the chart. If you don't know what Fibonacci's are, I did a video on that, and I'll put the link right up here. You can check that video out. But let's go ahead and draw some Fibonacci's here on the chart. So one thing I like to do is kind of come back here and kind of find where the lows were and where we are in relation to those lows based on previous moves. So if we start right here and draw our Fibonacci level in, this is what always amazes me, is how the stock respects these Fibonacci levels. And this is a perfect example of it right here. You can see that we had a big move up. As soon as that stock started to reverse, how far were we going to reverse? That's the question. So on these Fibonacci levels, we're coming down in here. We passed that 38.2, went right through that. Kind of, you know, had a little bit of a resistance here around that 50% mark. And then I found some more resistance at that 618, kind of bounced off that, but then right around that 786, which is basically the line in the sand. And once it passes that 786, most of the time it's going to go to that 1272 extension of that move. So, you know, we found some resistance here at 786. It bounced up. Since we have not cleared this high up here, we are still in a downtrend. So again, tested that 786. Came back up. Finally, right here, this candle closed on just above that 786, and then we broke through it. Had a big dark candle breaking down below it, and where did we go? This is what I always find so interesting. Almost to the tick, we came into that 1272 extension right here, and you know, that this just right down here off that 1272 extension, and now we found some support. And based on that Fibonacci level, I mean, if you just looked at this chart without drawing these fib extensions on here, you would say, what caused this stock to rebound and go up from here? And here's the interesting thing, right? So we know that the market as a whole on the 24th of December had a rally, started rallying basically right off of that level. And wow, well, interestingly enough, it corresponds with this 1272 extension. How ironic, right? If you didn't have these extension levels on your chart, you would just look at this and say, well, what caused this market to rebound and rally? Well, there's some other catalysts in the market that caused it to do that, but at the same time, you know, we have a Fibonacci extension level right here at 1272. Kind of interesting, right? Most moves will terminate around that 1272 extension level. So now that we've seen, you know, where we are here as far as, you know, pulling back, we come into that 1272. Now I can erase this one. We're not even close to that one. So we've bounced right off this 1272, almost to the tick. And now, how far are we going to go up here? So here we're going to draw some Fibonacci's on here again. So I like to come right up in here to this top one. Let's draw it from the high down to the low, and we'll see where we are in respect to these retracements. So we broke through that 38.2. We've also broke through this 50% retracement. We broke through the 61.8% retracement. The next level here is that 786. Now, if you remember, you know, on these here, on this move here, from, you know, the retracement of this move here back into this one, this was the 786 right here. This level right here was the 786, and it held and it kind of bounced around. So we're looking at, you know, coming into that 786 here again. You know, we're looking at maybe this stock coming in here, finding a little bit of resistance, and either pulling back or doing, you know, something like this before it eventually breaks up through that 786, if it does, and then goes up here to that 1272. So we're looking at a little bit of a resistance right in this level, and so we're looking at selling an iron butterfly because we hope that this stock is going to trade in a range there. So let's go ahead and look at you know, what we can get for selling an iron butterfly in this ticker symbol. So to do that, we're going to come right up in here to the trade tab. So we're going to come in here and sell that iron butterfly. Now, when we sell an iron butterfly, what we're doing is we're selling an at the money put, and we're selling an at the money call option, and then we're going out on the call side and the put side, and we're buying protective options to protect our position there. So right now you can see the stock is trading exactly at $110 right now. So we're going to be selling an at the money put at the 110 put and an at the money 110 call. So we're going to come back in here to our trade tab, and we'll come in here to the 110. You can see we're trading right here at 110. We're going to go ahead and click on the bid and the 110 on the put side, and then we'll go ahead and hold down our control key on the keyboard, and we're going to come right over here to the call side and click on the bid on the call side as well. Now right there together, you can see that we're now selling the 110 calls and the puts. 110 call, 110 put. And for that trade right there alone, if we were not to buy any protection and we were just to sell those positions naked, this would be a straddle. But because we're going to go out and buy protection, that would be an iron butterfly. So we're selling the same protective, or selling the same strike prices on both the calls and the puts. And if we were just to do that right there, we'd receive $3.76. But we want to go out and buy some protection, and we're going to go out and buy protection at about six strikes out on each side. So if we're looking at the 110 strike, if we came over here on the put side, came down to about the 104 level. Now if we hold down the control key again and we click the ask, because we're going to be buying at the ask, we'll go ahead and click the ask, and that added our put side in there at 104. And now we'll come over here to the call side, and we're going to go up about that 116. So again, hold down the control key, and we're going to click on the ask again, and now you can see that we're trading, this will be trading at $3.18 if we were to sell this iron butterfly just as it is. So let's go ahead and analyze this, and we'll throw this into our analyze tab, and we'll see what our percentage of profit is on trading this. So we're going to come right in here to throw it in your analyze tab. Just right click anywhere on your trade and then go analyze trade. All right, so we're going to throw it in here to our analyze tab, and you can see that we have the normal looking iron butterfly. Now again, looking at this iron butterfly, we're selling the 110 call and selling the 110 put, and our maximum profit is going to happen right here at 110. So you can see that our max profit right here is at that 110, and you can see our zero mark right over here. So anything above this zero line is going to be profit at expiration. So you can see that we make the maximum amount of profit right here at that 110 strike. And what's our maximum profit? Well, $3.18 or $318 if we let this iron butterfly go all the way to expiration. So by selling this today, we're going to receive $318 into our trading account. And then anytime we sell something, in order to close that trade out, we have to buy it back. So our goal in trading this iron butterfly is that this iron butterfly will actually, the sold positions, all the positions will expire worthless. And so for that to happen and all of them to expire worthless, the stock would need to be right here at $110 in order for for all positions to expire out of the money and worthless. So is that going to happen? Most likely not, but we do have a range here. And the way we find our range or our break-even points is by taking what we take in a credit here of $3.18, and we're going to add that to the $110 strike. So on the upside, we're going to have $113.20 basically, and then to the downside, we're going to have $106.78. So that's where our break-even points are on this trade. Is $3 to the upside, $3.18 to the upside, $3.18 to the downside. So let's go ahead and see what that looks like on a chart. So before we actually do that, when you're analyzing a trade, make sure that you have up here in this window that you have the expiration date. So we're looking at the March series, and so we want to make sure that we have the March expiration date in this window. Otherwise, all these numbers are not going to actually match up. So one thing I needed to do here, guys, is these numbers right here are actually quite not exactly right because I did not set these slices yet to the break-even points. They're very, very close, but to do that, you need to come in here and go set slices to break even on the expiration day. 3/16/2019. This other date here is actually today's date. So if we wanted to find out what the break-even point is as of today, we would click that. But we want to find out what the break-even point is on March 16th, 2019. So we went ahead and clicked that, and it barely moved these over just a little bit. And when I was reading these numbers here, I could see that they weren't quite $3.18, and they still aren't. They're very close. This one's $113.17. So it just depends on where that stock is actually trading at the time. So anyway, that's how we decide where those break-even points are. We can do that. Now let's go ahead and throw it onto the chart. And we do that by coming in here and we go set slices. Again, come down to the break-even point. Right below the break-even point, it says set slices. Now if you just click this first little window right here, what it's going to do is it's going to take these slices that you see right here. It's going to throw those onto our chart, and we're going to be able to see visually where those break-even points are. So if we come in here again, we go set slices to chart. We'll throw those on our chart there, and now you can see that our break-even points are 113.17 on the upside and 106.83 on the downside. So let's look at IV rank here, and you can see when I click this IV rank tab, I have my chart set up to show you guys where where expiration is. So again, what we're looking for is that stock to stay in the range of 106.83 to 113.17 by March expiration, right down here. So again, coming up into that resistance here at that 786 retracement level, as long as we are below our 113.17 on the upside, if this stock just kind of trades along in here by March expiration, we're going to be able to keep all of that credit that we received. But normally, you guys, I don't really hold these all the way to expiration. I'll usually set an order to take me out of this trade at 25% of that profit. So if we sold it for $3, $3.18, I'll set an order to take us out at 25% of that profit. Just because of the nature of an iron butterfly and that iron butterfly trading, you know, that stock trading in that range for so long may not be there. We want to capture the volatility crush as it comes in here and starts to kind of dwindle down as it decides if it's going to go up above that retracement level or go down below that. We want to capture that indecision where the volatility starts to kind of shrink, and then that's where we start to make our money. Also, time decay. Every time we get closer to that expiration day, that time is also working for us. So again, there's our break-even points, 113.17 and 106.83. You can see the implied volatility is not the highest. I mean, usually we want to try to sell these when implied volatility is really high. Right now it's at 23.9%. That's the IV ranking, which means that 23.9% of the year, over the last year, volatility has been lower than it is right now. So it's not really high right now. Normally it's great if we can sell these around 50-60% on the IV ranking, but you know, it doesn't mean we can't sell iron butterflies when IV's low, but it helps us to get a little bit more money for those options that we're selling if the IV is high. So let's go ahead and come back in here to our trade tab, and you can see again we're still trading here at $3.18, and let's go ahead and make this trade. So we're going to go ahead and click on this confirm and send. Now here's where we can see what our max profit is, and we're looking at $3.18 or $318 to make this trade. That's our max profit if we were to hold this all the way till expiration. Now our max loss, since it's a $6 wide iron condor, meaning $6 for those protective call and $6 on the protective put side, it's a $6 wide iron butterfly. We would take, you know, that $6 and we'd $318 of that is going to be profit. So the other $282 would be a loss if it were to go against us. So that's our max loss in this trade. So let's go ahead and try to sell this for $3.18. So I'm going to go ahead and click confirm and send, and we'll see if we can get filled here. So we got a sell order in. You can see our sell order sitting here at 110 on both sides, and then our protective call and our protective put out here. So we're looking for that spread to get filled at $3.18. So let's just go ahead and wait here a few minutes and see if we can get that filled. Another thing I like to do here is come in here to the monitor tab, and you can see our working orders here. So these are working orders that I have to take my trades off that I've already sold positions for, and now we're looking at this trade right here. We're waiting to get it filled, and this is a sell. This is a sell order. So if we're not getting filled, you can see what the mark price is, $3.19. Our what we're trying to sell this for is $3.18. But we can also just come in here and right click on that and go cancel replace order. It'll bring our order up here again, and you can see where we are. So we're right up here at the top range of this order. We're looking to get filled here at $3.18. If I wanted to get filled, I could, you know, right now I could actually just dial this down and get a little bit more between the natural and the mid and get it filled that way. But I don't like to chase so much, so I'll just kind of let it sit here at $3.18. And if the stock moves to a position where it actually, you know, moves up here about 110-ish, a little bit higher, we're going to be able to get filled around that 318 mark. So I'm just going to go ahead and let that work there at 318, and you can see that our order's still there. We're just waiting for that to get filled. And let's zoom back out here on our stock and kind of get a little more overall view of what we're trying to do again here. So again, looking for that stock to come in here, kind of meet some resistance around that 786, and then maybe wane off just a little bit like that. And then as long as we're inside of our break-even points at expiration, we're going to be able to capture that profit that we sold this position for, or at least 25%, and that's what we're trying to go for on these trades. So guys, hopefully that's been helpful for you. Appreciate you guys watching our videos. If you have any questions or comments about this style of trading or what we did in this video, leave them in the comment section below. We'd love to hear from you guys. I love trading options. They're amazing. You know, you couldn't do a trade like this with stock. You would have to, that stock would either have to go up or down. You could not make money trading stock with the stock trading sideways. And that's the beauty, and that's the most, you know, fascinating thing to me, is that we can trade these options and the stock can move sideways. It can move against us a little bit sometimes, and we still make money. So guys, hopefully this has been helpful. Thank you guys so much for watching. My name is Kirk with Tactical Options Trading. Thanks so much, guys. Have a good one. Bye-bye. All right, guys, so now it is 1 month later, and I just wanted to post a little follow-up here so that we could follow this iron butterfly trade all the way through to see what actually happened. So let's jump right back into the chart here. So now we're 1 month later. When we initially took this trade, it was back on February 15th, 2019, which would have been about this point right in here. And you could see that we sold those 110 strikes. And you just watch the video so you guys know what we're talking about here. We sold those 110 strikes, and we talked about in the video that this stock was coming up into that 786 retracement right in here, and we wanted that stock to kind of come up in there, find a little bit of resistance, and trade sideways. Now let me put up my IV ranking chart here. Now my IV rank chart just actually shows the expiration Fridays on here, and it also shows the IV percentile down here at the bottom. Now remember, we took this trade back here in February 15th, 2019, and we talked about how the IV percentile was not very high, but it was still okay to make this trade. Ideally, we want the IV percentile to be pretty high because we can accept more premium for trading those options, but it wasn't that high. But you can see that as we found some resistance in here up against this 786 retracement level, that the implied volatility, or the IV percentile, actually did drop. And coming in here to this this March series of options expiration, you can see that we did have a drop in implied volatility. And remember, again, we sold those 110 strikes looking for this stock to trade in a trade up against that resistance level. And where did we expire at? Right here on March 15th, 2019, we were sitting right here at our 110 strikes. So this trade is a perfect scenario of what we're actually looking for when we trade these iron butterflies. Now remember, we sold this iron butterfly for $3.18. So it put our break-even points out at $3.18 above that 110 and $3.18 below that 110. So we had a little bit of a range to trade into, and this worked out just perfect. We traded right in this range. Implied volatility dropped, and we were able to capture all that premium that we sold when we sold this this iron butterfly trade back here in February. So guys, I hope this video has been helpful to help you understand why we're trading these iron butterflies, what we're trying to accomplish when we're trading these iron butterflies. And if you guys have any comments on this video, post them in the comment section below. We'd love to hear from you guys. And again, my name's Kirk with Tactical Options Trading. Thank you guys so much for watching our videos. Have a good one. We'll catch you on the next one. Bye-bye.